Would you argue that now is the best time to enter this market? I mean, could you say that confidently?
And having been here for some time now, the one thing that I'm noticing is that the entire country is under development. But I think the most important thing is to evaluate and take proper advice.
How do I engage and take advantage of the Saudi market? How do I deploy the capital and do so responsibly? Walk me through it.
The private sector investment that's going in, which is supporting that. The one thing that just stands out to me is opportunity. When you come and spend time here, you can't help but see the opportunity and feel the opportunity.
You're listening now to the Real Estate Lab with Bayut.
Hi, I'm Benjamin Huff. Thank you for joining us for our first all-English episode of the Real Estate Lab, brought to you live at the 2026 Restatics Real Estate event here in Riyadh. I've got with me Scott Nicol, who is our Director of Global Wealth Management today. And Scott and I are going to chop it up a little bit and talk all things market, investor sentiment, strategy, and kind of where we are today. Scott, thanks for taking the time. I appreciate you jumping in. So you've been here now for a little bit of time, enough time, I would think, to have some opinions, to have some conclusions, maybe even a thought or a perspective that's fresh, obviously, with a fresh set of eyes. So how's it been going thus far?
Well, it's been great to have been on the ground. We've heard and saw a lot about what Saudi Arabia are doing internationally. They've marketed Saudi and what's going on here really, really well. But you never really get the sense of a market until you're on the ground. And having been here for some time now, the one thing that I'm noticing is that the entire country is under development. The infrastructure spend from government, the private sector investment that's going in, which is supporting that. The one thing that just stands out to me is opportunity.
I'm glad you said that, because obviously that's why you're here in terms of the vertical for Bayut. Months ago, we were trying to prepare. We were trying to make sure that we were able to service not only the domestic market, but obviously with the announcement, I think it's common knowledge now that Saudi is opening and has opened or made the announcement to open officially to the international market. So talk to me about the wealth management program within Bayut. How many people you have, where are they, what's their background, and then how are we going to leverage that in terms of not only with our developers here domestically in the portfolio, but also be able to get these products out into the international market?
I think it all starts with the product. I think that's the key factor. We have to have a product to take. The team is an international focused team where the aim for us is to cover the market globally. So at this particular point in time, we've got coverage in the UK, we've got coverage in Europe, we have coverage in Russia, we have coverage domestically across GCC, and we also have coverage in Asia and India. That's work in progress, so that team is going to be continually growing as we develop product to put into those markets. And essentially the team are focused on advising sophisticated investors, bringing capital into this market. The team is made up of predominantly real estate and banking experts who've operated in markets with their own clients for a number of years now. So from the perspective of being able to, one, dissect a market, understand that market, understand the opportunity which sits in that market, which essentially is made up of creating a product out of real estate and then presenting that in a way which is understood to investors who are not on the ground, who are sitting in different parts of the world. The aim of the team is just to hold the hand to allow that capital to be deployed in the market. Within Bayut, the platform is set up where we're vertically integrated. So we can identify an asset, we can analyze an asset, we can run financials on that asset, we can support the execution of the acquisition of that particular asset. And then subsequent to that, we can execute management strategies. One of the big selling points about our platform as well is that there will always be multiple exit strategies with real estate that's acquired by sophisticated investors. Some of them will want to hold for short periods of time. Some of them will want to hold for the medium term, and some of them will be long term. Within our platform, we can accommodate facilitation of those exit strategies. We have probably the biggest, or if not the biggest, sales and marketing team in the kingdom, in-house. So we can facilitate sort of the full life cycle of a sophisticated investor's investment into Saudi.
So, Scott, tell us a little bit about yourself. What's your background, and then enlighten us on kind of the jump to Saudi, how you got to that point, and then what went into that decision for you.
So my background is predominantly focused on UK and European real estate. For the last, in excess of 15 years, I've been focused on developing and investing in predominantly UK, with quite a bit of exposure to the German and the Dutch market in Europe. I've played principal development and investment roles, either investing or advising capital on balance sheet. But quite a large part of what I've done for the last 15 years is advise external capital. And what I mean by external capital is sort of family offices, high net worth individuals, and institutional investors. Typically, they have been overseas. They've not typically been based in the UK or the Europe. They've predominantly been based in the GCC. So I've been working very much with this part of the world for the best part of 15 years, which is almost all of my career. There's been various opportunities to come to the Gulf during my career, but the timing's never been right. The opportunity's probably never been right, but Saudi Arabia is a story which I've been following for some time. I've also heard about the story through some of my partners. When you look into what is happening here, when you come and spend time here, you can't help but see the opportunity and feel the opportunity. For me, that's a driving point. That's a driving point as to why I'm here today.
Yeah. That's great, because I think actually we talked about this earlier today, the Larry Fink episode that you sent, where he's speaking on Saudi, he's speaking on the progress of Saudi, he's speaking on the culture of Saudi, his experience in Saudi. Talk about that a little bit, because I know that was something that you were wanting to discuss.
Yeah, I think you're obviously aware of what was said. I would mirror those thoughts.
Yeah.
I think coming here, it's one of the most hospitable places that I've ever spent a sustained period of time. When you're on the ground here, you get that sense of optimism, you get that sense of positivity. It's very much unlike other parts of the world.
Right.
Everyone is positive, everyone is very humble in what they do on a day-to-day basis. Despite the opportunity they have here, they have a very, very strong domestic market, which is growing. And for a country where the future historically has been so bright, for it to go through the reforms it's gone through in recent times, and for it to have its proposed reforms in allowing international investment to come to the market, you can't help but feel a sense of optimism around.
Okay, yeah, and I agree with that. So then, in terms of a global scale and a global comparison, right? You look around the world, you see what's going on in the United States, right? Commercial real estate, and you and I have kind of discussed some of the issues that may be coming down the pipe there.
Yep.
And then, we've discussed the UK market as well. Obviously, we know what's going on in Dubai, with some of the saturation there. And yeah, of course, still great opportunities and things like that. But in terms of yield, right, the yield has been somewhat compressed. So when you look at the world and some of the different scenarios that are taking place, where would you personally rank the opportunities that you're now seeing on ground here in Saudi?
It's a really good question. I think that the Saudi real estate market is very much what I would describe as a core plus market. It's still a maturing market. There's still lots to work out and figure out within the market. It doesn't quite have that depth of, let's say, a London market or a New York market, for example, where they've had global capital allocated to those locations for for as long as I can remember.
Right.
We don't quite have that here yet, but you can see that the infrastructure has been set up to attract that. We have a very strong local market, both private investors, family offices, and institutional capital. When you layer that with the new regulatory reforms, the new legal framework that's coming in for international investors, that is only going to attract the same pool of investors, but from an international perspective. So when you start to layer the market with those types of investors, your market suddenly evolves from being something that's emerging or maturing into a core environment.
Right.
You'll have different pots of capital allocating capital for different periods of time from different parts of the world to different types of asset classes. So the opportunity to sort of be part of that evolution and be part of that cycle, or part of that first cycle, is extremely appealing to any investor. There's going to be sort of a phase of maturity which the market will need to adopt, and that will take time. That will take time.
Yeah, and I think, I've taken you around now to at least, to the properties and the developers in the Bayut portfolio, right? And it's clear. I mean, you look at this market and you can see there's already starting to be somewhat of a clear line of distinction from the developers that are building, as I've said to you before, they're building for tomorrow. They're building newer designs. They're building with better community flow engagement in mind. They're open floor plans and natural sunlight and things like that. So that's obviously a transition from the historical Saudi philosophy in terms of real estate and real estate development. And we've watched that kind of unfold specifically over the past year and a half. Obviously when we think about institutional capital, when we think about family offices coming in here, they're looking at returns, right? I mean, they're primarily looking at returns. But then there's that other component, right, where you've got a government agenda through the Ministry of Investment that is pushing an RHQ program. They're building, as you said, infrastructure to support and attract the biggest and brightest companies in the world today. So there is, with that, going to be a massive influx of demand for expat buyers as well.
Yep.
Right? So obviously, I think that's something that's going to continue to evolve, and I think that the top guys will continue to separate themselves in this market in terms of development. But from an institutional perspective, what's the magic number, right? What is the yield that you want to see before you're packaging a product and sending it out to your wealth managers around the globe?
I think from an institutional perspective, they are very much focused on allocating capital to meet, let's assume it's a pension fund, for example. Mm-hmm. That pension fund is going to have liabilities. If there is a spread over interest rates or bonds in the domestic markets, which allow them to invest into real assets and cover liabilities with a spread of 150 to 200 basis points, this is the way they think. I would anticipate there will be an overlay of the market, how they perceive the risk, and the reality of that is that every institution is going to perceive the risk in a different way. I think that when you look at global yields, let's just assume we're talking about the residential market here at the moment.
Okay.
Core residential yields are probably trading somewhere mid to high fours globally. If we take the UK market, if we take the US market, if we take the German market, which are three very good core residential markets which have matured over the last 15 to 20 years, those markets will trade somewhere in the region of mid to high fours.
Okay.
And they will always be 150 or should always be 150 basis points above where base rates are in that country. I think when we're looking at emerging markets, people always need that spread for risk. And if we're talking about unleveraged returns, which most institutions will invest on an unleveraged basis, you're going to be sort of looking at 7% plus. I think that's our hurdle we're looking at from a yield cash on cash perspective. When we're talking about the capital returns, every institution's got a different perspective on long-term holds and so forth. So cash on cash is the focus for most of the institutional world, if we're talking about residential.
Okay, so with that in mind, right, and you've looked at a number of our projects, And I've seen your models. I've seen you with your assumptions, and I've seen you work these things up and put them in front of me. Would it be fair to say that from that perspective, and if that's the criteria in terms of returns, that Saudi could be the top emerging market in the world? I mean, can I say that?
I think there's a very good case for that.
Yeah.
When you look at the risk-adjusted return for what will be a very core market and a core real estate subsector going forward,
Yeah.
I think you could perhaps confirm that is the case.
Okay.
I can't think of any other market. If we look at the Asian markets, yields are just probably too low for, let's assume, UK and European investors to go there and invest. If we're talking about residential, yields are very sharp. I mean, they would be below that 4% threshold, which I mentioned in the UK and Europe and US. So I can't think of any other market which is seeing the same level of support from a government perspective, seeing the same amount of infrastructure investment in its country from a government perspective, and has the same dynamic when it comes to sort of its potential GDP growth, population growth, its existing population. The population today of Saudi is somewhere in the region of 37 million people. That is an enormous market. You have a market which already exists. You have a domestic market.
Right.
For me, that's the fundamental for any market. So if you have a market which is going through a maturing phase and it has that existing fundamental of a really core population and a really strong financial system, then for me, that's the basis of a huge opportunity.
So obviously, you can't predict the future, but you've been here long enough. You've had enough exposure. Obviously, you've got your professional career all over the world. So let's assume 10 years from now, you're looking at Riyadh. You're looking at Saudi as a whole. What do you see? What do you predict is going to happen in terms of real estate, in terms of institutional money coming in? What do you think is the most probable outcome in 10 years?
I think looking forward over a 10-year horizon, I see a much more mature market. I see a legal framework, a governance framework that has been proven. I think from an institutional perspective, that's a very key point. The more the system proves itself, where you've got proof of execution, you are going to see much more institutional capital come into this market. But if we look at it from a GCC perspective, in 10 years' time, I think Saudi is going to be, from a real estate perspective, the key market. We talk about the size of the population and the growth that's going to support that population. I think you will have a diversified investor base who will be owning assets here. I don't think that's going to be limited to one part of the world. If we look at markets like the UK, specifically the London market, if we look at the US market, specifically, again, the New York market, and then if we take a market which is more regional here, like the UAE market, what we see there is global diversification, not only through sort of nationality, but the type of investor. If we can take all of those markets, we have a different sort of criteria of investor who's invested into those markets. So you have individuals, you have family offices, you have private developers and private investment companies, and you have institutional capital. And you have them from all over the world in each of those markets. I genuinely believe that Saudi is going to be very similar to that in 10 years' time, where at the moment, the market is very much made up of local capital split into those categories. However, I think going forward, GCC, domestic investors, Asian investors, UK, European and American investors are going to form a big part of this market. I think we're going to see very similar connotations to markets like London, New York, and the UAE as well.
All right, Scott, so we've talked about kind of the expectations, the standards in terms of institutional appeal and family office appeal. So I've got 100 million SAR, right? I'm ready to deploy it. It's good to go. What are you recommending to me? How are you structuring and allocating that 100 million? And what opportunities do you see today that you would take advantage of?
I think the key thing when you're building a portfolio is diversification. It's unlikely that we would advise you to put all of that capital into one particular asset, one particular location, one particular project, or even one particular sector. So for me, when I'm looking at the market, I'm probably looking across the key cities, I think, first and foremost. I'll be looking at Riyadh, we'll be looking at Jeddah, we'll be looking at the Eastern Province, particularly Dammam.
Okay.
And then I will be also looking at the holy cities, Mecca and Medina. One of the things that I think it's really important to look at when you're building a portfolio is the ifs and buts. So if you ever need to sell this, how are we going to sell it? How are we going to exit? Do we have depth and liquidity to be able to exit? So I'd be looking at where global capital allocations are and trying to align what I buy with the depth of liquidity on an exit. For me, when I look at global allocations, specifically institutional, there is two sectors that stick out to me very clearly. Residential and industrial and logistics. I think if you look at allocations across Asia, Europe, UK, US, they are the two highest allocations of the majority of fund managers across the globe. It didn't used to be that way. Retail used to favor very, very heavily.
Why is that? Why the sudden change in that?
I think consumer spending, consumer behavior has changed. We've had e-commerce, retail come really to sort of the forefront. And what I would say is that there is a suggestion in the industry, and a saying in the industry, called beds and sheds.
Right.
People need somewhere to sleep and live, and people need a platform to either work from or acquire shopping from. And that typically revolves around homes and industrial units and logistics units. So for me, when we look at where global capital is investing today and where it's projected to be investing in the future, residential and logistics. That would probably make up about 90% of my allocation. So I'd put 60% into residential. I would look at both longer term, stable and predictable rental projects. I would also look at some shorter term rental projects as well. Specifically when I talk about those holy cities of Mecca, Medina, you're going to have a lot of visitors there. You're going to have to operationally manage those assets, but that market is set up really well to cater for the shorter term rental. So from the perspective of location, that would be my pick for residential short-term renting. When it comes to logistics, I would probably look at Dammam, Jeddah and Riyadh. Dammam and Jeddah have their own sort of demographic and fundamentals which would support logistics distribution. And obviously Riyadh is the capital city, so anywhere on the outskirts of Riyadh is going to serve the city well. For the remaining 10%, I would just follow global sort of manager trends. I would look at other institutional type asset classes. I'd take a little bit more of a wealth preservation approach to this 10%.
Okay.
I would acquire core commercial property, most likely in either Jeddah, Dammam or Riyadh. I'd look at offices, I'd look at some hospitality. I wouldn't want my exposure to be too great in this space, but you do still have global capital which does target these sectors, whether it's a specialist fund or they're allocating capital. So for me, it would be heavily led by residential. I think it's the most mature asset class globally. The most capital is allocated to it, followed by logistics with some offices and hospitality in there as well.
Okay, so Scott, I think obviously, and maybe this is just me personally, I want to hear about your biggest or greatest or the success story in your perspective, in your mind, that comes up when as I ask this question, that you're the most proud of in your career.
It's a good question, actually, and it connotates with my move to Saudi Arabia, because I love to be in sectors or markets where there is maybe a dislocation or there is a little bit of immaturity there, but you can see the vision. Yeah. You can see where it's going, and you can try and navigate a platform or build a structure which sets itself up to take advantage of that. The UK residential sector, if I go back 15 years, 20 years, has been a very fragmented sector. You had what I would call the sort of new build developers who would build for the market and sell to end users. Very little institutional interaction, if any at all. And then you had the rental market, which was very much owned and operated by individuals. So people who had successful careers, who had surplus capital to invest. So let's just take the connotation of accountants, lawyers, doctors.
Discretionary income.
That for the best part of my career was the UK residential rental landlord market. So in 2012, I was actually looking at a transaction in the US, which was a multifamily transaction. I was sitting on the investment committee, making a decision as to whether we should invest into the US multifamily sector. And it got me thinking about the fragmentation and the sort of dislocation of the UK sector. When I looked at all of the other sectors in the UK, what we had was professional management and we had branding. So shopping centres, retail parks, new build residential housing, office buildings, student accommodation, service departments. They were all professionally managed, they were all branded. But long-term residential the rental market was just so fragmented. There was part of me which thought there has to be an opportunity here, there has to be a way of professionally managing in this sector in scale. And the only way you'll ever get an institutional investor to come into the sector is by having an opportunity which has got enough scale.
Right.
I stumbled across an old friend of mine. He was sort of working on a very similar idea. If we fast forward 18 months, we had put together a structure to build, manage, or build, develop and manage in the region of about 10,000 homes across the UK, which were for rent. That structure was a structure which we put together from nothing. We worked out how we would acquire the assets, ultimately the land. We worked out how we would develop it. We worked out how we would fund it. We worked out how we would manage it, and then where ultimately the exit would be. And the idea was to build a platform which we professionally managed, branded, operationally very, very efficient, generated what would have been at the time above average returns coming back to Saudi, sort of a immature sector or a maturing sector. You're always going to benefit from that sort of risk-adjusted return profile. That was the target in this particular transaction. And we ultimately pulled it off. We developed, in fact, some of those homes are actually still being developed today.
Wow.
But we did the first phase of around 1,000 units. And it's just that sector has matured enormously now. There was nothing of this scale ever done in the sector at that point in time. The transaction was around 700 million sterling in value. And at the time, it felt completely normal. But looking back on it, it was absolutely crazy. But we just believed in this particular transaction so much, and the sector, that looking back on it, we think collectively that was a trigger point for a really professionally managed UK private rented sector residential product. Every institution in the UK now has a large allocation to it.
Wow.
Institutions in Europe and institutions globally are allocating capital to it. It's now a 50 billion sector. 10, 12 years ago, there was nothing. Which, when you think about it like that, it was a bit of a no-brainer. But you think back, nothing of that scale had ever been done at that point in time.
Wow.
So I think that's probably certainly the proudest, because it was a big risk, had to get lots of people on side. One of the funding partners was a sovereign wealth fund. So there was quite a lot of stakeholders in this particular transaction. But looking back, definitely the proudest of my career. And ultimately as well, one of the most successful.
Oh, I bet. And I think, at the end of the day, right, with the increase in risk, right, your expectation is obviously increased return. And am I right to say that? Like, the higher the risk, obviously, the higher the return that you would need.
Yeah, most investors will look at a risk-adjusted return. Yeah.
Right. So how does that apply today, right, for Saudi? Because obviously, we know the government tailwinds. the mindset here from the developers to the government regulatory bodies. Everyone is seemingly pulling in the right direction under MBS's guidance for the 2030 vision. So in terms of risk-adjusted investments, right? Would you argue that now is the best time to enter this market? I mean, could you say that confidently?
I think I could. Yeah, I think getting into any market early is always a good thing. I think allocating everything you have to that market early is maybe not such a good thing.
Right.
But I think the most important thing is to evaluate and take proper advice. I think with any market you're going into, whether it's a new country or whether it's a new sector, the most success stories that I've saw throughout my career is where local advice, local partners have always been leveraged.
Okay.
It's becoming a much more traditional approach to use local knowledge, local partners, whether it be a joint venture, whether it be an external advisor or an asset manager. I think having that local knowledge is incredibly key. No matter how much you think you know about a market, you don't know it as well as a person on the ground.
Wow, I agree with that. I think that's well said. Absolutely. Okay, Scott, I'm convinced. I'm thoroughly convinced today. I am going to deploy my capital. All right, I'm an institutional fund out of Dallas, Texas, by the way, and I'm ready. I'm ready. How do I engage and take advantage of the Saudi market? How do I deploy the capital and do so responsibly? Walk me through it.
I think the first thing you need to do is find a partner. Working with a trusted partner on the ground is going to benefit you. I think you can always devise your own investment strategy. I'm sure you've raised your capital on the basis of a strategy. I think working with a partner who understands not only the Saudi market, but global markets, because you're probably exposed to other markets as well, probably the US market. I think having partners who can hold your hand through the life cycle of the investment here in Saudi, but also put it into context with what you've done elsewhere. We'll be able to understand what you've done elsewhere. We'll be able to understand how the US framework works, how the framework in the UK or Europe works. We can understand working around the different markets. So from the perspective of ease of access, find a partner. I think that's the easiest thing to do. Find a partner who can hold your hand through everything. I'm not just talking about a lawyer, a tax advisor, an accountant. I'm talking about someone who's got an integrated platform, who can sort of identify assets, who looks at the risk from a real estate perspective, from a legal perspective, from a structural perspective, from a financial perspective. I think if you find that partner, and whether you work with them in an advisory capacity, in a joint venture perspective, I think that's the easiest way to enter the market. But also make sure that that partner has got global context and has just not been focused on the local market, because what might be a good deal from a local perspective might not be a good deal from a global perspective.
Okay.
You need someone who can put that into context, who understands how global trends are working, where capital's been allocated. Someone who's got a bit of a macro and a micro view on markets.
Okay.
I think that would be my advice to you if you're looking to deploy.
Okay. All right. So in a sense, you've just described Bayut.
I have, yes, I have.
All right, good. Hi, thank you for joining us to another episode of the Real Estate Lab. My name's Benjamin Huff, and we are bringing to you a unique perspective on the Saudi real estate market.
You're listening now to the Real Estate Lab with Bayut.